Hello everyone. This is the pre-market report video for today, 12th July 2023 in the Indian stock market in terms of Nifty and Bank Nifty. On last November, China unveiled a 16-point plan to revive the Chinese real estate sector that includes supporting the mortgage interest rate payment, lower interest rate for new construction, etc., which accounts for as much as 30% of Chinese GDP. As per the original plan, all that benefit will end by this year. Now, yesterday morning, China's central bank and China's National Financial Regulatory Administration jointly announced that some of these measures would be extended until the end of 2024. So, before the Indian market opening, this along with the positive US market close made the global momentum really positive. Thus, in line with that, Nifty opened a gap up of 60 points and moved higher over 19,500. And at the same time, European market too opened positive, but soon it started to drop, so does the Indian market. For example, if required, please pause it and have a look. I compared the Nifty percentage change with respect to Germany's major index and UK's major index. As you see here, blue curve is the Nifty and it drops as the European market drops. However, Nifty successfully defended and closed above 90,400. Stock specifically Reliance supported, which we discussed enough in detail in the last two pre-market videos. In addition, yesterday ITC released their last financial year annual report, in which they mentioned a lot of new positive items which investors liked so much. Some of them are in FY 2022, ITC products reached 20 crore households, whereas in FY 2023 that increased to 23 crore households. Second, in their online website business, they mentioned that they are able to reach over 24,000 plus pin code delivery. Here the funny thing is, as far as I know, India got only 19,100 pin codes, but ITC released that they are able to reach 24,000 plus and investors did bought those. Or maybe I am wrong. Anyway, except metal and PSU bank, all the sector ended in green, especially auto, power, FMCG and healthcare increased 1% each. Even the overall market was also good as the advanced decline was around 1.26, which means 26% more number of stocks advanced than it declined. About institutional activity, FII net bought for near 1200 crore rupees, whereas DII net sold for just around 10 crore rupees. Moving on, after the Indian market hovers, as I shown in the comparison, once the Indian market closed, all the European market again started to improve and closed positive. That positivity was carried to US market as well. All three major index opened positive. In addition, Jefferies upgraded the JP Morgan Bank to buy rating from hold, and Bank of America said they were very positive on US Bank Corp earnings. Both their statements made the US banks really positive. After that, EIA released the short-term energy outlook. They forecasted there would be a oil production cut and also there will be an increase in the demand. Thus, EIA now expects spot prices of Brent crude oil will average $78 a barrel in July and crude oil price will reach $80 a barrel in the fourth quarter of 2023. This is the huge positive news for all the energy stocks. So basically, banks and energy made the Dow Jones to increase over 300 points. Even the oil price increased over 2%. At the time of this video, Brent crude oil was trading near $79.5 US per barrel and WTI crude oil was at $75 US per barrel. In case of index, Dow Jones up by 0.93%, S&P 500 increased 0.67% and Nasdaq too increased 0.55%. VIX decreased marginally and moved below 15. Regarding Indian areas, IT stocks, both Infosys and Wipro closed positive and the percentage of increase was in line with Indian market, but the highlight was banks. I mean, yesterday in Indian market, ICICI and HDFC, both banks closed negative, but still in US market, both closed positive of 0.4 and 1.5% respectively, which implies that now banks too turned positive. About GIFT Nifty, at 3 am Indian Standard Time, it closed at 19,537, which means it's roughly indicating 30 to 40 points gap up opening. So that's all about the global market. Now let's move to the India related specific info. First, let's discuss about the yesterday's GST Council meeting, like what got cheaper and which got costlier. Movie tickets, food and beverages GST dropped from 18% to 5% and whereas some of the life-saving drugs exempted completely from previous 12%. So those are the one that will become cheaper, so it will be positive for those stocks. In contrary, big SUVs bigger than 4-meter length or above 1.5-liter engine will now have additional 22% cess on top of 28% GST. And all the casinos, horse racing and online will become costlier, as now the 28% tax will be applicable even on the face value. Those are all negative for those particular stocks. Second, as we all know, today in the aftermarket hours, TCS will be releasing their results. The present expectation is that the revenue to grow around 0.5% increase quarter to quarter, EBIT margin to be around 23.32 and profit expect to decline 4.6 quarter to quarter. So basically, market already prepared for those. If it comes worse, then it's disastrous. As a summary, global market is good, GIFT Nifty indicating the gap up opening. More importantly, banks looks positive. In addition, because of this TCS earnings results, we can expect some short covering in the IT stocks. So overall looks okay. Let's see. Then about the things to look out. TCS, HCL, 5paisa and Anand Rathi are some of the major Indian companies' earnings results are scheduled to release today. And in terms of macro, during the market hours, it's just at 11:30 am, UK's Bank of England Financial Stability Report is due. However, in the aftermarket hours in the evening at 5:30 pm, India's CPI, consumer inflation is scheduled to release. At present, the expectation is to increase by 4.59%. And in the night, very important, various US consumer inflation data are due. Coming to technical, yesterday, as we discussed, Nifty opened a gap up and in the morning, buyers were very dominated and moved Nifty towards 19,500. But as soon as the 19,500 was reached, then sellers came back and they dominates and pushed the Nifty down. But once it was 19,400, buyers again came back and supported the market. So it's a very narrow range, but both buyers and sellers try to get them as upper hand. Thus on the daily chart, Nifty forms a green shooting star candle, which indeed shows the strong resistance at 19,500. Nifty has been trading between 19,400 to 19,500 range for the last 6 trading sessions and has shown strength at lower levels and weakness at higher level. So 19,500 would be the crucial breakout level, above which the market could move up till 19,600 to 19,625. However, below 19,380, the selling pressure is likely to accelerate and the index could retest the level of 19,300 to 19,250. About Bank Nifty, it's currently experiencing continued dominance from sellers as selling pressure persists and facing a strong resistance zone at 45,200, which has proven difficult to surpass. At present, the index is trading near a crucial support zone of 44,800 to 44,750. If this support zone is breached, it is likely to lead to further downside movement towards the 20-day moving average, which is positioned at 44,500 to 44,000 range. Bank Nifty index has been trading within a broad range of 44,500 to 45,500. Anyway, let's see. Regarding options open interest, for Nifty, if you see the change in open interest, there were significant new put options were added at 19,400 and huge call options were unwound at 19,400. So 19,400 is the immediate support. Then, based on overall options open interest data, 19,300 got the maximum nearby put option open interest without significant call option open interest. So, if 19,400 breached means 19,300 will act as a strong support. And the maximum call option open interest is present at 19,500 followed by 19,600. Since 19,500 is the short straddle and thus 19,600 is the immediate resistance to break. Then coming to Bank Nifty, based on overall options open interest data, significant short straddle were present between 44,800 to 45,000. Then the maximum call option open interest without significant put option is at 45,200. Thus 45,200 is the resistance to break. And the maximum put options without call option is present at 44,500. So 44,500 is the support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.